Hey guys, welcome back. And I got a very exciting video for you here. And I'm going to show you how today and yesterday, in 2 days, I was able to pass an Apex funded trader challenge account. Now, I have a love-hate relationship with these challenge accounts. I find that they're pretty scammy in a lot of ways. However, they can be good at, testing things out and trying out new strategies with a little bit of skin in the game. So I wouldn't take these funded accounts too seriously, but today and yesterday I passed one of them, so I thought I'd share with you guys exactly how I did that using two tools. So what two tools are we going to talk about? Okay, so the first tool we're going to talk about is the volume profile charts. Okay, now if you don't know anything about volume profile, I'll go through some of the very basic and fundamental uses of it right now. But I studied volume profile for 30 years. Like, I'm not even exaggerating. That's how long ago I started studying volume profile. So for me to get into really a lot of detail about it, and is really, it would take a lifetime basically. It would take at least 3 years. But I'll give you the basics of it, okay? The other tool we're going to talk about, how I did it, is using Voland. And if you guys have been following me for any length of time, I'm absolutely in love with this company. And I think it's probably by far one of the most superior tools if you are interested in trading the SPY or the ES. How anybody trades without this tool is beyond me. And I'm going to show you how I used it specifically. Okay, so let's go back to the chart here. Okay, so we're going to start over here. Hopefully you guys can see my crosshair. I know I'm not an expert with NinjaTrader, but again, these are 30-minute candles. We have the big hot CPI number that came in this morning, and down we go. Flush, down we go. Now, what I really want you to pay attention to is these curves, if you will, that are beside the chart, okay? And what these are specifically, these are the profile of volume represented on a sideways scale, okay? So the big thing that really kind of shocked me, as you can see, as we dropped after the report, this area right here, where this box is here, this became an area of interest for me, because as you know that, let's see if I get this, that was a pretty, sorry guys, that was a pretty bearish and hot inflation number that came out. Okay, so I was, from a fundamental point of view, I was pretty bearish this morning. Now, so this was an area that I was very interested in, both coming back to and going away from. So let's go over to the second tool, Voland. Whoop, where it go? There we go. And we're going to look at the dealer positioning and exposure at 9:30 this morning. Okay. Now this is what we call a GEX paradigm, which is a bullish paradigm, and it's telling me that the dealers' positionings are such that there's going to be an incentivization for dealers to keep prices high and hedge those prices with increased or decreased volatility. Now, when I was coming into this morning, based on that number, the aggregate of this was 121 million and 162 million, so about $300 million worth of cumulative GEX. Okay, so I was looking for a potential long. Where was I interested in taking those longs? Well, that's something that I was going to let the market show me where I was going to take that long. So just notice something here. This is 9:30. I'm going to advance this just to show you how it changed. At 10:30, and I'm only looking at the 0 DTE, you can see that this shifted, didn't it? Instead of having a lot of red below, we had a lot of green above. And what this is what we call a Bank of America paradigm, which suggests a two-way market. In other words, there's going to be buying and there's going to be selling. It's not going to be like a straight trend day. If it might go lower, it might go higher, but it won't be a trend day. Okay, on GEX or an anti-GEX day will probably result in more of a potential of a trend day in any event. So you can see at 9:30 we were in a buy mode. 10:30 we switched to a rotational mode. Got that? Remember those times? And we'll look at, I'll just advance it to 11:30 just to show you here. You can see we kind of stayed in that what we call Bank of America or rotational mode, okay? Now again, this doesn't mean we can't go higher, we can't go lower. It just means that there is not a large incentivization for a strong one-way directional kind of higher low, lower low, a lower high, lower low, higher low type of day, okay? More of a rotational back and forth day. So you got that? At the beginning of the day, looking for a long. As the day progresses, we look for a rotation back to the mean. Everybody with me so far? Hopefully you are. Good. Okay, so let's get back to the charts. Okay, so we have the big flush down. As I told you, this level here became very significant to me. And so this was the area that if we got back to this area and the paradigm changed, this was where I was interested in a short. And I'm going to let the volume candles tell me where I'm going to short, okay? But early on, I actually did take a small long. And why did I take a small long? Well, I'm going to show you right now. Okay, so the other thing that's important on these charts is notice the red and blue coloring. Now that's delta. If you don't know what delta is, it's a very, very simple term that if it's blue, it's more aggressive buying. If it's red, it's more aggressive selling. I'm going to keep it simple as possible for you. So I was looking for a long in the morning because we did have that GEX paradigm or at the time that I found a long, our rotational back to mean paradigm. Okay, so we have all of this coming down here. Obviously I'm not touching that, obviously I'm not touching that, and here's the, remember I'm looking for a long. I have to have a reason to find a long. So this candle comes right down here. This is a 10 o'clock candle. The very next candle is when I saw all of this buying right here. Okay, all of this buying right there. All of that blue that you see here. Now I can zoom in and we can actually take a really close look at that. Now in real time I was seeing this heavy buying, and you can see, look at, there's 5,000, 10,000. That's a lot of contracts being fired off there, okay? And in real time was very convincing to me. So I'm looking for a mean revision back up to this level up here, which was the level that I believed we were going to see some sellers come in. So I had kind of already planned out my day, and unfortunately this candle went a bit too far, but I did catch a small long off of this level right here. You can see the market opened up here. I scaled into the trade off of this little high volume node right here, okay, and I rode that. It didn't look nice, but you know, it actually went higher. It came back. It closed here. I was a little hesitant at taking that. I didn't like the shape of this profile, but I decided to take that trade with some small size. Okay, This wasn't my really big winner, but I'm showing you everything. Now, when we get back up into this level, I want to see signs that we're going to rotate back down. Okay? Oh, sorry, guys. Let's continue here. Okay, now I didn't see anything really significant here. Okay, I didn't see really anything there. We closed at the high. But after this candle closed right here, you can see the accumulation of negative delta in this particular situation was really strong. So now I'm looking for, because the Vol-Land paradigm is showing me that we're short. I've got two scenarios going on here. I've got the 0 DTE market makers are not going to support this market higher. How low it's going to go, I don't know. But I've got the bad news of the hot CPI number, and I've got a bunch of sellers stepping into this market. Okay, so this is where I decided to go with size, and you can see on the very next candle, we opened up, went straight lower, still heavy selling, heavy selling. I held on to my trade. Okay, this was a bit dangerous here, but when we popped higher here, I actually added to my short, because when I jumped into the trade initially, it was a decent size, but it wasn't a heavy size. When we ended up popping up here, and you see all this blue up here? This was telling me that there was a lot of trapped longs. So a lot of buyers here. So when we came back down below that level, I started adding to my shorts, Why? Because those buyers are going to get squeezed. Got that? And you can see we close at the lows. Down we go. Down we go. Down we go. And there you have it. $21,000 in 2 days from using two tools. Vol-Land and volume profile, as well as using obviously the hot CPI number. If you're interested in Vol-Land, I'm going to put a description, a code inside the description box, which will get you 10% off any subscription that you choose. Hope you guys enjoyed that, and wish me luck. These Apex challenge accounts, like I said, I don't have a lot of high hopes because they are rather scammy. This particular company, the reason I don't like this particular company, but they're $140, guys. It's not a big deal, right? It's worth it to get $300,000 worth of funding. The reason I don't like Apex in particular, Apex, if you're listening, got to change the trailing drawdown rule. The trailing drawdown rule is really stupid, because even though, let's say that I got whipsawed on this candle right here, right? Let's say I had $12,000 in profit here. If I had lost $6,000, meaning I still had $12,000 in profit, but I went down to $6,000, I would have failed that challenge today. So I just got lucky that that didn't happen. That trailing drawdown is really scammy. But $140 to practice on these things, and now they've got to fund me. They have no choice, right? So, as long as I don't break that rule in the future, then, they have to pay me if I want to continue it. But to be very honest with you, I just really use these accounts to test out various strategies and to build my toolbox with my live accounts. I don't really take these seriously. They're just more for fun, but what the heck, you still have to push the buttons, and you still have to get the direction right. Okay, thanks guys, and bye for now.